Ladies and gentlemen, good day and welcome to the Ashoka Buildcon Limited Q3 FY22 earnings conference call hosted by Anand Rathi Shares and Stock Brokers. As a reminder, all participant lines will be in listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Meet Parekh from Anand Rathi. Thank you, and over to you, sir.
Thank you, Tanvi. On behalf of Anand Rathi Shares and Stock Brokers, I welcome everyone to the Q3 FY22 earnings call for us. From the management side, we have Mr. Satish Parakh, MD, and Mr. Paresh Mehta, the CFO, with us. We will start with the opening remarks from the management regarding the industry, the results, and post which we will open up for an interactive Q&A. Over to you, sir.
Yeah, thank you. Good morning, everyone. We would like to extend a warm welcome to everyone on our earnings conference call for the quarter ended December 31st, 2021. Along with me, I have Mr. Paresh Mehta, our CFO. Let me start with the equity sale of ACL projects. We have successfully completed an asset sale transaction of Ashoka Concessions Limited of 5 SPVs by entering into a share subscription and share purchase agreement with Galaxy Investments 2 Private Limited, an affiliate entity of KKR. The deal to be completed by September 2022 after receiving required approvals from lenders, NHAI and other relevant stakeholders and completion of certain condition precedents. The deal transfers the entire share capital of these 5 projects, including repayment of shareholders' loan for an aggregate consideration of 1,337 crores. The total proceeds received will be utilized to facilitate the exit of SBI Macquarie funds from Ashoka Concessions Limited, allowing SBI Macquarie to exit the company fully. Further, the transfer of these 5 SPV will reduce the consolidated project debt of ABL by 3,166 crores. Post this transaction, the company will remain with following major projects in highway portfolio: 74% equity stake in one toll project, that is Jaora-Nayagaon in the state of Madhya Pradesh. 4 annuity projects which includes 50% equity stake in Chennai ORR and 3 fully owned projects, Hungur-Talikot, Bagewadi-Saundatti and Keship, and fully owned portfolio of 10 HAM projects. As mentioned earlier, we are at an advanced stage of discussion for equity sale of Jaora-Nayagaon BOT toll and Chennai ORR BOT annuity. Also, the HAM projects portfolio, we are evaluating to exit options like InfraVit or sell to investors. Coming to industry updates. The rise in addition of national highway is compared to 13,326 kilometers of road constructed in 2021 and 1,237 kilometers in 1920. In 2021, the construction of roads per day increased to 36 kilometers per day against 28 kilometers in 2019-20. In an effort to boost the logistical capacity of India's road network, under the PM Gati Shakti initiative, the Indian government has stated that the national highway network will be expanded by 25,000 kilometers within 22-23. The government is expected to increase pace of highway construction. Existing highways will be made into a bigger, stronger and new ones to provide connectivity to all economic nodes under PM Gati Shakti initiative. The target national highway expansion of 25,000 kilometers in FY23 will put an impetus on strong project award. The current expansion plan by government is expected to help the faster movement of people and goods. Coming to HAM projects, we have received appointment date for Ashoka Bettadalli Shivamogga, that is Tumkur Shivamogga Package 4, in the month of October. The total equity requirement of all 10 HAM projects is about 1,337 crores, of which already 960 crores has been invested as on December 2021. Coming to the order book. As mentioned, we have achieved a robust order inflow of 8,526 crores in current financial year. Some of the key large orders are as follows. We have received an order from MCGM for a sewage treatment plant of O&M with 15 years, and this order is a breakthrough order in sewage treatment for the company. Along with this, we have achieved work orders in Goa on a highway project from MRTH amounting to rupees 687 crores. We have also received LOA from NHI worth rupees 829 crores for construction of 6-laning from Belgaum to Sankeshwar bypass of NH 48 in Karnataka on EPC mode. Recently, we were L1 for railway electrification order worth 693 crores. Also, we have received work order of 263 crores from Navi Mumbai Airport. The breakup of 12,250 crore order book as on December 2021 is road projects comprise of 7,633 crores, which is 62% of our total order book. Among the road projects, the HAM road projects are to the tune of 2,638 crores and EPC projects are to the tune of 4,995 crores. Power T&D and other projects account for around 1,902 crores, which is 16% of our total order book. The EPC building segment contributed to 1,905 crores, which is also 16% of our total order book, while railway stood at 729 crores, which is 6% of total order book. The EPC work and CGD comprises of balance of around 82 crores. The total order book, including the projects received and the railway project where we are L1 in current quarter, stand at rupees 14,500 crores. Let me reiterate that our focus remains to build strong EPC businesses in the segments of highway, railways, power, T&D, buildings, and now water treatment. The current order book of rupees 14,500 crores provide us with good visibility of EPC business growth. On asset portfolio front, we have already built 10 HAM projects portfolio. In terms of new projects bidding, our priority will remain for HAM projects and strengthen the HAM project portfolio further. This is all from my side. I would now request Mr. Paresh Mehta to present the financial performance of Q3 FY22.
Thank you, sir. Good morning, everyone. The result presentation and press release for the quarter have been uploaded on the stock exchanges and on the company website. I believe you all may have gone through the same. Now I would present the financial results for the quarter ended December 31st, 2021. Starting with the consolidated results, the total income of Q3 FY22 grew by 10.8% year-on-year to rupees 1,475 crores as compared to rupees 1,331 crores in Q3 FY21. EBITDA stood at 433 crores in Q3 FY22 with a margin of 29.4%. Profit after tax is at 389 crores in Q3 FY22. The exceptional items in the consolidated financials is write back of 326 crores on account of remission towards investors in ACL. We have entered into agreement with SBI Macquarie through which we have reduced the obligation to rupees 1,200 crores from rupees 1,526 crores. Now coming to the standalone numbers, the total income of Q3 FY22 stands at rupees 1,133 crores as compared to rupees 1,028 crores in the corresponding quarter last fiscal, registering a growth of 10.2%. EBITDA for the quarter was at 150 crores with an EBITDA margin of 13.2%. The company reported loss of 694 crores on Q3 FY22 as we have recognized exceptional item of rupees 769 crores. The exceptional item in standalone financials is expense of 769 crores towards impairment of its investments in equity shares, CCDs, and loans given to ACL. This is mainly due to sale of equity of 5 BOT projects to KKR for an aggregate consideration of 1337 crores and giving exit to Macquarie. During Q3 FY22, BOT division recorded a total collection of 257 crores as against 260 crores in Q3 FY21 and rupees 243 crores in Q2 FY22. Total consolidated debt as on December 31, 2021 is at rupees 6,822 crores, of which project debt is rupees 5,923 crores, of which 3,166 crores stands for project debt of 5 projects. NCD stood at rupees 250 crores at ECL level. The standalone debt is at 649 crores, which comprises of 140 crores of equipment loans and 509 crores of working capital loans. Out of the total consolidated debt of 6,822 crores, rupees 3,163 crores will be transferred along with the 5 SPVs of BOT projects. Post the sale of transaction, effective consolidated debt will be at rupees 3,656 crores. With this, we now open the floor for question answers. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yeah, hi. Good morning, sir. Thanks for taking my question and congrats on the great execution in this quarter. Sir, just wanted to confirm on one thing. I think when we had this call regarding the sale of the 5 assets to the KKR group entity, we had mentioned that I think we are expecting the write-off to the tune of 500 to 600 crores. Any specific reason that it ended up being significantly higher than what was estimated?
When we had on the call post the transaction, the amount was not including any provision for exit for SBI Macquarie. It was only talking about the projects on an estimated basis on the projects of the 5 BOT projects only. So from that perspective, additional provisioning is on account of the exit to be given to SBI Macquarie, which was counted in this quarter.
But sir, why would that lead to a incremental provision in standalone books? I can understand there could be some provision, but why would it be required in our standalone books?
So what happens is the total obligation to be paid to Macquarie will depend on the ACL's net worth, which the ACL's realizable value. The balance has to be funded from ABL's holding in ACL. So from that perspective, this provision of a total 770 crores has been provided for in Q3. Probably we can discuss on a one-to-one basis.
Sure, sir.
On a one-to-one basis also.
Definitely, sir. And this is the total provision, sir. Do we expect any more provision after this, or this takes care of the entire transaction requirement?
This is the total provision for the valuation of ACL on these 5 BOT projects. Then we are left with one project, that is Jaora-Nayagaon, which will typically fetch more value than its book. And also then there are the HAM projects which are at book almost.
So we do not expect any more write-offs maybe going forward, even if we were to sell Jaora-Nayagaon or Chennai or Aurora projects?
Nothing very significant.
Sure. Got it, sir. Got it. Sir, in terms of the order book, if I could basically get Satish sir to maybe comment. Sir, I think we've had very strong order inflow. But even then, I think, sir, our order book right now, which is around 12,000 crores and maybe 14,000 crores including the L1, we basically are looking at an order book which is slightly on the softer side of more like 2.5, 2.8 times book to sale. So are we looking at basically aggressively bidding for more kind of HAM projects? I think it's been some time we won some HAM projects. One is on that front, and second is I just wanted to check again on the fact that recently the mega projects of Ganga Expressway were awarded to IRB and Adani Group. If it works for us, would we be open to working for them as a subcontractor, given the mammoth size of the projects that they are?
Yeah, so see, our focus will always remain on highways, and budget also shows very optimistic aggression by government to build highways. This will come on EPC as well as BOT mode. Recently also we have one EPC, two highways, one in Goa and another in Karnataka. So our participation is going to be there in all these highways, and the projects which are won by major players like Adani and all, we are also taking interest in participating and trying to get EPC part of this portion. So we are open to such offers in the market.
Got it, sir. So this last connected question, we recently won this project on BOT basis in the sewage treatment plant. I think we've been testing those waters earlier with CGD and now with the sewage treatment. Will we be looking for similar kind of more projects, BOT basis? I thought that we were basically looking more like either HAM projects or more EPC projects only. But if similar kind of projects, let's say, come in sewage treatment, CGD or water or mining, are we open to bidding for these kind of projects on BOT basis?
So let me clarify, this is a pure EPC project with operation maintenance only. That too paid operation maintenance for 15 years. So this is not a BOT project. And your question of whether we will be open to bidding any of these kind of projects, it will all depend upon structures, availability of finance. If it is available and our role is to be a major EPC contractor, then definitely we'll be entering in there.
Sure, sir. Got it. Thank you so much for taking my questions and wish you all the best.
Thank you. A reminder to participants, if you have any questions, please enter star and 1. The next question is from the line of V. Vijay from Spark Capital. Please go ahead.
Yeah, good morning, sir. So are we interested in bidding for developing solar projects? Because I saw our name in one of the recent solar bids. And if so, why are we bidding for being a developer on the solar side?
We are not trying to be a developer in solar side. What we have done is we have been participating for EPC part of solar projects.
Okay. Because I remember seeing Ashoka's name in one of the hybrid solar cum storage bids recently. That is as a developer, right? If I'm not wrong.
See, there are arrangements where finance is made available, and we have to play our EPC part in most of these projects. So there are structures available where we actually pay our EPC part and not the investment part.
Sure. So the idea
is always to remain as more of an EPC player than a developer.
Sure. So the idea behind this bid was someone else will bring in the investment. Right. So who would that be?
Absolutely.
Who would that be, sir?
We cannot disclose. These are very strategic names behind this. So,
okay.
Yeah.
And we'll continue to bid.
We are not able to disclose. Yeah.
Okay. And we'll continue to bid for such projects in the future.
Yeah. If EPC is our strength, and definitely we would like to encash that.
Okay. So even on the solar EPC side, we are building our capabilities, because I don't think we have solar projects executed in the past.
No, we are already executing a solar project for NTPC on EPC basis. So already we have experience now executing solar. Yes.
Correct. You're right. Sure. Okay. That's it from my side.
Thank you. Participants, if you have any questions, please enter star and 1. The next question is from the line of Mohit from DAM Capital. Please go ahead.
Yeah. Good afternoon, sir, and congratulations on an excellent quarter, especially on the order inflow. Sir, my first question is, I think you received a appointed date for all the projects, and I assume that the work on the Panagar to Palsit also started. How do you expect the FY23 to pan out in Q4? Can we expect in FY23 5,000 crore kind of the top line?
Yeah, so let me clarify on appointed dates. Panagar Palsit, we have still not received appointed date, but we expect that to receive in this Q4. And other projects where we are L1, but we are not, or we have got LOA also, but appointed date are yet to be declared, like Mopa Highway at Mopa Airport Highway at Goa. We still not received appointed date. Sankeshwar, we have got LOA, but we are yet to receive appointed date. So all this we will receive either in Q4 or Q1 of next year, and definitely these all orders will pick up as we go along in Q1, Q2, Q3, Q4. So next year we see good growth looking at the order book available in hand and picking up of the projects.
Can you expect to have some growth over FY 2022?
I think we can easily target around 25 to 30% for 2023.
Secondly, sir, I think we are in
25
advanced
to
stages.
30% in next year, yeah.
Understood, sir. Sir, I think we were in advanced stages to complete this Jaora-Nayagaon Chennai ORR. Can you expect this in Q4? And the related question is, what will you do with the receipt from Jaora-Nayagaon? Will this be used to reduce the standalone debt?
Yeah. So Jaora-Nayagaon and Chennai ORR, we do target to get these deals signed out before 31st March. So that is what is our focus. Definitely, what cash will come in at AB level somewhere around in the Q2, probably Q2 of next year. At that moment, definitely a debt reduction would be one of the targets at the standalone level. And depending on surplus availability and the new contracts being available, we may decide allocation of the capital either for debt or for investors, depending on how the execution pans out.
Last year is a water sewage order which you received from MCGM of 10.5 billion. I think the order which you mentioned in the presentation is around 6 billion. So should I assume that is 4 billion is for O&M for 15 years, or is it in JV and somebody else has to do the balance work?
Yeah, it's a joint venture. So we have captured in our presentation only our portion of the execution, because that's the EPC. The work is of 1,046 crores, which we have in joint venture. So that's what we have declared in the stock exchange. It's a joint venture with another party.
Understood, sir. Thank you and all the best, sir. Thank you.
Right.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, sir. Congratulations on a decent quarter. My first question is on the bid pipeline. So if you can highlight the bid pipeline now segment-wise, and how much of the bids have we submitted which is yet to be opened?
Yeah, bid pipeline, as we explained, NHI is aggressive on putting up a lot of bids, and we are participating in most of the HAM and EPC projects. So,
Hello.
hello.
Yeah, sir. Can you hear me, sir?
Yeah, could you just repeat what exactly you?
So I was asking if you can give us segment-wise, like buildings, T&D, railways, highways. So what kind of ordering or bid pipeline is there for the fourth quarter? And also if you can highlight how much of bids we have already submitted which is yet to be opened.
So bids submitted and to be opened, there are a few bids, of course, which are yet to be opened. Around 9,000 crores bids are there which are yet to be opened.
Okay.
These are basically into highway sectors.
And what about railways, T&D and other segments, sir?
Railway, there are no significant bids which are yet to be opened.
Okay. Okay. The other question is on margin. So you have guided for 25 to 30% in standalone EPC revenue growth for next year. So for next year, given the commodity headwinds and some of the other peers reporting drop in margins, so how do you see the margins, EBITDA margins for the next year? If you can give some guidance there.
I think margins will be able to maintain because we also are taking into consideration while bidding the commodity prices variation, which is really affecting the sector. So these are part of our bid inputs, and most of the bids have price variation clauses. There are very few which are like fixed price contracts.
So what is the total fixed price contracts percentage in our order book, and is it safe to assume that next year you can do 12 to 13% EBITDA margin?
In the road projects, most of the projects you may call HAM or you may call the EPC contracts, most of the projects have escalation clauses. Other projects, most of them are in the fixed price nature.
Okay. And so next year, EBITDA margin could be like in range of the 12-13%, or will be more like 11 to 12%?
It would be in the range of 11 to 12%. That's what we have. 11.5 is what this 9 months is throwing up, and probably that would be range which will be maintained for 22-23.
Okay. So just lastly, if you can tell who's the joint venture partner in the MCGM? So, I mean, just wanted to understand, is it more for technical scoring, that's why we partnered with them, or so what's the reason for doing it in JV? So you can just highlight there.
For MCGM?
Yeah.
Yeah, this is basically from qualification perspective, certain requirements are there. So we need, and also being experienced, this is a new segment for us. So the JV partner brings in the experience and also the qualification.
And who's the JV partner here?
I have Gondwana Engineers as the JV partner who have been doing sewage treatment plants since long.
Gondwana Engineers?
Yeah.
Okay. Okay, sir. Thank you. Those are my questions. Thank you.
Thank you. The next question is from the line of Ranjit from Mahindra Manulife Mutual Fund. Please go ahead.
Yeah. Hi, sir. Good morning. Sir, if you can throw some more clarity regarding the infusion, excluding the PAM portion in the hybrid annuities that will be required. Hello?
Yes, sir, you're audible.
One thing. Sorry, I was on mute. I'm so sorry. So the equity infusion for the balance HAM projects in the coming 21-22 and 22-23, wherein most of the HAM projects, all the HAM projects will be funded for equity, other than PIM, would be 145 crores for this year, balance in the next 1.5 months, and 139 crores for 22-23. So total investment yet to be done in these HAM projects is 284 crores. So maybe some of the equity for 21-22 may get spilled over for 22-23, depending on execution and requirement of the project.
Okay, and what's the update on this Maldives social housing project?
So on this project, the government, Maldives government is in the process of tying up debt with Exim. We'll have to wait till then, unless if they are successful in tying up, then this contract will continue.
Okay, and any more large orders in the international geographies we are looking at?
Yeah, we have been participating in international geography. So Bangladesh, we are L1 for a 500 crore job.
Okay. Okay, sir. Thanks and all the best.
All right. Thank you.
Thank you. The next question is from the line of Subhadeep Mitra from JM Financial. Please go ahead.
Good afternoon. Sir, I think you've already given a guidance of about 25 to 30% growth in sales. I'm sorry, I may have missed some of the details. So just reiterating here that are we looking at this kind of a growth for both FY23 and 24?
Yeah, with current order book and looking at the government focus on highway sector, we feel we should be comfortably able to grow by 25 to 30% for both years.
Understood. And any target order inflow that you have in mind for FY23-24?
Yeah, 9,000 crores is yet to be opened. That is all highway sector. That is where we are quite optimistic of getting something. And also some portion in Ganga Expressway, which could be an EPC part for us.
Understood. So what I was basically trying to understand is there any overall targeted order inflow or annual order inflow number that you have in mind, going that annually you would like to reach a targeted order inflow of a certain number?
So like this year we have already done around 8,500. So 8,000 to 10,000 should be, we should be able to cross 10,000 this year. And then next year, maybe even more.
Understood.
Go up to 12,000, yeah.
Okay.
Now the focus have gone major highways like expressways, which really are of good size and they give good fast turnover also. Okay. So looking at the spending of the government, we feel coming 2-3 years will be a very good growth in highway sector.
Okay. And lastly, with regard to the solar EPC project that we are doing for NTPC, I think in the last call you mentioned that the modules for the same is still to be procured. Is the status still the same or have you already procured the modules?
Status is still the same and we are discussing with the NTPC to how to resolve this ordering issue or we'll take extension from them. Yeah.
So is there any possible penalty that could come up in this particular project and what is the last let's say quarter by which you would have to procure the modules to finish it on by deadline?
So basically we are in discussion with the authorities and till date there is no such indication and because this is a complete problem for all the entire sector for all the projects. So this is being discussed at policy level to resolve this issue.
Okay, so your best guess would be that the deadlines would get extended on this one?
Yeah, definitely. Balance of work is absolutely as per targeted timelines. So all balance EPC is being done, except for the module, everything is being kept ready. And this is very well understood by the authorities also. Because for them, it's not they have a large portfolio and they understand it across the sector.
Understood. Thank you. That's it from my side.
All right.
Thank you. Participants, if you wish to ask a question, please enter star and 1. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Thank you, sir. Thanks for the opportunity again. Sir, I think I missed out on the guidance front. You mentioned 25 to 30% kind of a growth in FY23, but what in FY22? More like a 20. What is the guidance for FY22 in terms of revenues?
22 we would cross around 15 to 20% is what we still feel we will be able to achieve.
Okay. Got it, sir. Also, sir, just a small bookkeeping question. Our debt at the standalone level appears to have gone up this quarter from, I think, at the standalone, the working capital debt that we're talking of. So any specific reason on that? And if you could just maybe tie it up with how is the payment cycle looking? How are the payments from various government bodies looking at?
Yeah, so basically, there's realization which are happening in Q3, which will take care of the slightly higher debt, inflated debt on the working capital. It's more of a catching up with the billing payments.
More of a timing issue.
Yeah.
Got it. And so the payment cycle from NHAI, from other government bodies, are they on track, or any specific delays that you might want to flag off?
No, nothing very significant on NHI payments once they are approved. So that way that's comfortable.
Okay. And the power T&D projects in Bihar and Jharkhand, other states are also on time, sir?
Yeah, we have received, in fact, a few collections which were pending for last in this quarter, and definitely some payments are in due course and they'll come in. There are retention payments which will come in when they are due. So there's still some time to go for the retention.
Got it. So, but nothing that is out of the ordinary that is being delayed.
There is one state, Jharkhand, where there is a bit delay, but then that we are following up and keenly.
Got it, sir. Got it. Right. So just one last question from my side. Basically, now that we have managed to basically close this deal with the KKR Group, and as you mentioned that we will also should be able to wrap up the Jaora-Nayagaon and the Chennai project by March. That gives us a good amount of, let's say, headroom in terms of our bidding ability. So could we see more HAM projects going forward, and could we also look at some of the BOT projects as we had bid for some of the NHAI projects in West Bengal? Would we be looking at bidding for BOT projects also, or is it going to be the same waterfall that we have chosen before of EPC, HAM and BOT?
So basically, it will be more of EPC and HAM, and very selectively where we have some structured arrangements for investments and all, we will participate in BOT where investments are taken care by the investors.
Right, sir. And the BOT would be depending on this. Let's say if I'm talking about BOT roads, would that be in JV with somebody, or would that we will want to go alone? Or would that also depend on?
Yeah, it's project to project completely.
Project to project. Sure. Great, sir. Thank you so much for taking all my questions, and I wish you all the best again.
One clarification: the West Bengal project is not a BOT for us; it's an EPC for us. It's a BOT for Adani projects.
Right, sir. But I think last year we had bid for a couple of projects from BOT which we were not able to win. I was talking about our overall strategy of bidding for BOT projects.
Right.
Got it, sir. West Bengal is EPC. Yeah, got it.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Good afternoon, sir. Thanks for taking my question. Sir, can you give me the revenue breakup segment-wise, sir, for the quarter or 9 months?
Yeah. So, road total revenue was 898 crores for the quarter. Power was 49 crores. Railway was 70 crores. CGD and Smart Infra was 37 crores.
Okay. So, road, can you repeat the road sector again, sir?
898 crores.
98. Okay, so, road 898.
And RMC 48 crores. Yeah, please go ahead.
RMC 48 crores. Okay.
Yeah. Yes.
So, power 49, railway 70, CGD and Smart City 37, RMC 48, and road 898 crores. Right, sir?
Right.
Okay. And sir, can you give me a few bookkeeping numbers like debtors, creditors, mobilization advance, unbilled, revenue retention, and inventory as on December?
So, total debtors is in the range of 1,094 crores. Unbilled revenue is 1,071 crores. That's the reason this, as we said, there is a slight jump in the working capital requirement. Advance is around 360 crores to be recovered. So this is on the debtor side. And on the creditor side, 33 crores is what is outstanding. Yeah.
Inventory, sir? Inventory and retention money?
Inventory is small, 165 crores.
And retention also 500 crores?
Retention is around 209 crores. So this is inclusive in the debtors, 1,094.
Retention includes in debtors, right. So this, sorry, sir?
Yeah. 1,094 crores of debtors includes 209 crores of retention.
Got it, sir. So this debt level which has gone up, so now obviously our revenue mix is changing going forward because the share of other segments is going up. So do we see this debt levels to remain elevated because the payment cycles in other segment is always like 3 to 4 months, while in road it has been faster. So this will be the consistent phenomena of working capital levels remaining elevated and debt levels at this level, or you are expecting the debt level to come down by March? And what is your view, sir?
So maybe 50% of the impact of debt level being higher is a mismatch in the payment of road sector. Once that is which is being taken care in Q3. So then from that perspective, the impact on the working capital requirement and the debtor levels would increase marginally because of the other sectors, which will have increased working capital by approximately 150 crores.
So we can see debt levels of 650 to 700 crores by March end. It will not change significantly, what I see.
Didn't get you. What was that?
So the current standalone debt is of 650 crores. So we can expect the same number. It will not change significantly.
Huge, because the road sector mismatch will get resolved. So then it should be in the range of 500 odd crores.
Okay. 500 crore, right. And sir, obviously you've given the order inflow guidance for this year. We are targeting 10,000 crores. So we are expecting 1,500 crore more order inflows from the road sector. Is my understanding correct, sir?
Right.
And sir, now what kind of revenue inflow means going forward? You have guided for 12,000 crore of inflows next year. So what kind of mix do we see in this, like from the roads and the non-road segments, sir?
So basically, we expect 75 to 80% again roads, and 20 to 25% other sectors.
Okay. And sir, are we going to participate in any TOT projects of any TOT bids? Because as you said correctly, you might go selectively for BOT projects, as we saw in Ganga Expressway. So any TOT bundles or any future NHI TOT bundles we would like to participate in?
No, as of now, we are not analyzing anything.
Okay. And sir, last question from my side. CAPEX for 9 months and for full year guidance and next year CAPEX guidance and the current bank limits, fund-based, non-fund-based and utilization levels, sir.
So the CAPEX for 9 months was very significant, but by end of this quarter, we'll have a CAPEX around 50 to 60 crores on machinery side and machinery and IVAs and other things. And on the, as I said, debt utilization, we've already given 650 crores as of 648 crores. And BG bank guarantee limits utilized in the range of around 2,600 crores.
So 2,600 utilized. What is the total limit is, sir?
3,600, which will get enhanced by another 700-800 in the coming month. We got sanctions.
Okay. In working capital, we have used almost 500 crore plus. So our limit is what, 1,000 crore in working capital?
No, so this is in two forms. Our basically working capital loan is 350 crores. We have dipped into, based on our MBPF and our, we have dipped into working capital demand loans with bankers at a very fine rate in the range of 4.25. So that's kept the interest rate also lower, but this will be liquidated over a period of time as these realizations which will come from the mismatch in the road sector. So that will go down. Otherwise, our working capital limit for non-fund based is 350 crores.
Okay. And sir, the CAPEX guidance for next year, like this year you said 50-60 crore total CAPEX. Next year would be how much? Like same number or we can expect more, sir?
So depending on the mix of projects which we win, so in the road sector and others, I think so we'll continue to, we will probably have a total CAPEX of around 80 to 100 crores.
And sir, any refinancing opportunity in the HAM projects? So what is the refinancing rate we are getting now, or for the new HAM projects, what are the financial closure rates we are getting now, sir, from the banks?
So the completed road projects, we have two completed, and one yet to one completed, but annuity yet to come. where we have opportunity for refinancing. These are due in May 21 for reset. So on that date, we'll do a refinancing probably with the existing financing. So this would be in the range of in today's rates compared to today's rate, range of 6.9 to 7.1. Where today's financing rate is on 7.9, so that will be an arbitrage of approximately 1%.
That's it from my side, sir. Thank you and all the best, sir.
Thank you. The next question is from Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Hi, good afternoon, sir. Thanks for taking my question. My question is, what is the equity that we had infused in our HAM project this quarter?
In this quarter, there was a not significant infusion, around only 14 crores. But post that, in Q4, we have already invested 55 crores, which includes major in TS4. That is Better Delhi Shivamogga.
Okay. And, have we received the appointed date for the Banur Kharar project?
No, we have not yet received.
Okay. So is that the only...
Post-election, we'll get this, yeah.
Okay. So of the 12,000 odd crores order book that was there at the end of December, is that the only project where appointed date is still pending, or are there any other projects as well?
No, that is the only project where appointed date is pending, and the others which we have received in Q4, that appointed dates are pending, which I mentioned.
Yeah.
This Mopa Airport and Belgaum Sankeshwar.
Thanks. That's it from my side.
And of course, Panagarh Palsit, which we are expecting now.
Yeah, sure. Thanks.
Thank you. The next question is from the line of Varun Murthy, individual investor. Please go ahead.
Hi, thank you for the opportunity. I had a couple of questions. Just wanted to know what is the debt position on the HAM portfolio as of date, the HAM portfolio under ACL, and also on the two projects that you said are at advanced stage, basically. Am I audible?
Yes, sir. Mr. Parak, Mr. Mehta, we are not able to hear you.
Sorry, I was on mute again. What is the question again? Can you just get back?
Yeah, I just wanted to know what is the debt position on the 10 HAM projects you have as of December, and also the external debt on the two projects that you said we are in advanced stages of selling.
So the debt on all the HAM projects as of date is approximately 2,000 odd crores, and which on the two assets. One second, I'll just get you. Give me a minute, I'll just get back. Maybe you can come.
Yeah, so one other question that I had was you mentioned in your opening comments and also in your investor presentation around the monetization of the HAM projects. So just wanted to check, given that most of these projects are still like in under construction stage, like is this like a viable monetization near term, or like is this something that we are looking out, say 1-2 years down the line, basically?
This should be in a range of around not more than 1 year's time for the completed project.
Okay, and is there any early thought process around like the monetization? Because I'm assuming even in an InvIT you would like end up owning most of the stake. So like would the eventual decision be driven by what is the value you're getting, or like do you want to like do you have a preference to continue ownership of these assets for the maintenance work, etc.?
So transferring to an InvIT probably will not entail substantial stake on our side, maybe in the range of 25 to 30 on a revalued basis, not more. So some cash will definitely be monetized. Definitely, if we are the sponsors, we will definitely continue to maintain the assets and have revenue from that side.
Okay, thank you.
And coming back on the debt on the two projects which are completed, on the Kharar Ludhiana, the debt is around 568 crores, and on Ranasthalam project, it is 391 crores. Total debt is around 2,200. Total debt is 2,200 crores as of December.
Okay, thank you.
Thank you. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, thank you for the opportunity. Sir, just this question was asked in a slightly different way earlier, but in this total 1337 crores of equity that we are investing in the HAM projects, what is the PIM component and what is the actual investment that we will end up making in everything put together?
So, on the total equity of 1337 crores, which is envisaged, the PIM contribution would be around 386 crores.
Okay. And the balance is the cash flow invested from your balance sheet?
Yeah, share capital or quasi equity.
Correct. Sure. And sir, when you are evaluating or you are talking to an investor in terms of the monetization, the potential of these projects, the benchmark would be 1337 crores of equity invested, right? I mean, at a fully invested stage, obviously. Because at the end of the day, the PIM which is got invested in the assets is actually the equity capital which otherwise you could have kind of captured it elsewhere in your EPC, right? I mean, am I getting it right?
Yeah, so finally, end of the day, when the valuations will be arrived at, it will be based on the future cash flows. So it will represent both the share capital and the PIM.
Right. So basically, you retaining the entire PIM component in the asset, that leaves more value on the table in the assets. That's the point I'm trying to arrive at.
Yeah.
Okay. Right. And sir, directionally on the margin component, we have been diversifying and we have indicated our intention to keep getting more and more diversified. So on an ongoing basis, what is the kind of margin trajectory one should expect? Should we be more in the range of like a 10, 11%, 11, 12% on a, let's say, medium-term perspective?
This will be generally in the range of 10 to 12%. The roads will be slightly higher because that's a high expertise field of ours. Projects may have a lower margin based on competition or as a new entrant. So the range would be in the range of 10, 12. Or the mix probably would be in the range of 11.25 to 12%.
Okay. And sir, also on the MCGM project that we have got. So, if you can talk on what is going to be our role, what is going to be our share of the EPC, and how does it help us in the future? What is the whole thought process behind that project?
See, basically, this is all sewage treatment plants, and entire civil works are being done by us. So it's all 65-35 sharing in a JV ratio, and this also gives us a good amount of qualification going ahead bidding in these kind of projects.
So going ahead, sir, are we indicating that we are looking at sewage treatment or maybe desalination? I mean, is that the area that we are trying to build up the qualifications for?
Yeah, as a strategy, see, 70% would always remain 70 to 80% is road and highways, and 20% we are trying to enter into EPC segment of buildings, sewage treatment, water treatment, and railways.
Right.
Yeah. So
sure. And
require similar kind of skill set which we already have. They all have a lot of civil portion in them. Like railways are civil as well as electrification and telecommunication, which we are already doing. Sewage has this, and treatment part is also not like very difficult to pick up and execute.
So who are our partners in this? Because we said we got it in a consortium.
Gondwana Engineers is our JV partner in this, and they have been doing these treatment plants since more than 3 decades now.
Sure. And so lastly, can we just talk about your thoughts on the CGD business going forward? Because in the recently concluded bids, we haven't sort of got anything. So what is your whole thought process on that business going forward?
So here we have 3 GAs with us approximately with a project cost of around 850 crores, and all the 3 GAs are operational and they have started revenues. We have an investor, Morgan Stanley, also in the joint venture, so they definitely will be looking out for an exit in a year or two's time. That is generally their horizon of 4 to 5 years. So from that perspective, this set of projects could be available, could be taken up for monetizing too.
Okay.
Presently, because in view of most of the GAs have already been bid out and allotted, the next round of bidding may take a lot of time because most of it is almost covered now. Most of it, yeah.
So basically, sir, is it safe to say we are looking at an exit from this business because you said the partner also wants to exit, and if you're looking at monetizing this?
Yeah, there is one possibility. We don't mind running it, but good possibility that in case the existing partner also wants to exit, it would make sense if we get a good valuation.
Okay. And there is no guaranteed IRR obligation, etc., to the Morgan Stanley investment, right?
No.
Okay. Okay. And just last thing, sorry, how much have they invested so far?
So at present, we have invested approximately 140 crores.
Okay. And your investment is also a matching amount, right? Around 150 or so.
No. Put together.
Achha, put together, sorry, it's 140. And is it equally split between them, between you and Macquarie? Morgan?
5149.
5149. Okay. Sure. Thank you. Thank you.
Thank you. The next question is from the line of Jiten Rishi from Axis Capital. Please go ahead.
Sir, thank you for taking my question. Sir, one last question from my side is, what is the outstanding equity in Jaora-Nayagaon, including sub-debt and loss funding, if any, and in Chennai, and the outstanding debt balance as on December, sir?
So, on Jaora-Nayagaon, the basic equity is 287 crores, which is intact, and there is no funding, additional funding on the project.
Yeah. So basically, the Jaora-Nayagaon's total investment is 287 crores, right, including sub-debt and actual equity, right, sir?
Yeah. There's no sub-debt. It's pure equity of 287 crores.
Pure equity. Okay. And sir, what about Chennai ORR?
Chennai ORR, 189 crores is the pure equity, and there is a debt of around 240 crores.
240 crores is the sub-debt.
Yeah.
So, sir, this 287 crores of Jaora-Nayagaon is 100% level, or it is 74% our stake, sir?
This is 100%.
And Chennai ORR also 100%, right, sir?
Yeah, that is also 100%. But the debt which we are talking about has been funded by ABL.
Non-interest bearing, sir?
Non-interest bearing.
Non-interest bearing. And sir, what is the outstanding gross debt?
It is interest bearing, sorry.
Just 240 crores is interest bearing, so like around 10-12% kind of. Okay.
Yeah, slightly larger. Yeah.
And sir, what is the gross outstanding borrowings in both the projects as on December?
On both the projects, on Jaora-Nayagaon, it's approximately 187 crores. And on Chennai ORR, it's approximately 850 crores.
But it is excluding the 240 crores, right, sir?
So this is external debt which I'm talking of, term loans
debt
from lenders. These both numbers of 187 and 850 crores. These are term lenders' money.
Okay. So basically, sir, if you go through the transaction, probably this 240 crore of loan will come back to you, and any additional equity over and above what you earn, that will come back to you, right? According to your share. So this 50% partner in Chennai, or what is the status like GVR? Like we were supposed to, the stake of ours was supposed to go back to 100%. So the company was in NCLT. So any update on that, sir?
The talks are on.
Oh, okay, sir. Okay. Thank you, sir. Thanks a lot, sir.
Thank you. That was the last question. As there are no further questions, I will now hand over to management for closing comments.
We thank all the investors for joining on this call. We would be happy to take any other queries. We are available, or Stellar Relations are also available for queries. That's all from our side. Thank you very much.
Thank you. Thank you, everyone.
Thank you very much. On behalf of Anand Rathi Shares and Stock Brokers, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.